The presidential election is in full swing, and what you may not know is that the economy has a lot to do with it.
This morning we're talking with Jonathan Murray with UBS about a new survey talking about how the election and politics are kind of interacting with
This
each other.
year especially, guys, it's really something. Our survey, which interviewed 2,300 investors, revealed that 84% of them are very, very concerned about this election.
Okay.
And over 90% of those respondents believe that the number one concern is the economy. So
Really?
this year in particular, it seems to be an election that's somewhat polarizing and also almost strictly about the economy.
Okay.
So voters, they're concerned about how the election turns out because that'll affect their bank accounts, right?
Exactly. In fact, Tracy, it's kind of weird because regardless of their sidings, they believe that if their particular candidate wins, the stock market will do well. So on one side you have, you know, the Clinton camp thinking if Hillary wins, the stock market's going to do well.
Right.
And if Mr. Trump wins, those fans believe that that the market will do well. Conversely, if the other person wins, they think the market's going to tank.
Yeah.
Oh, wow.
It's really polarizing.
So are you already seeing then people changing their habits with their investing? What are you seeing?
Yeah, it's really interesting because usually the election doesn't necessarily or directly impact portfolio decision making, but we're seeing, at least according to the survey, that investors are starting to do things in their portfolio preparing based upon their expectation as to who might win the White House.
So what advice would you give clients who are concerned right now?
To not do that.
Okay. Okay.
Yeah, it's too early to begin to manipulate your portfolio based on who you think is going to win the election. And I think because it's such an emotional time, investors would be well served to kind of take a step back, remember your plan. You know, Coach Harbaugh tomorrow against the Bills, he's going to have a plan.
Right, right.
And it's the same thing with an investor. You should have a disciplined financial plan, whether it's to pay for your kids' education, for your retirement, whatever your goals and objectives are, to remember your plan, and that helps you remove the emotional aspect from investing. Emotion is the enemy of successful investing, and you just got to kind of step back.
Okay, now pick your brain just for the short run. We've seen some adjustments here yesterday. You're just talking about how there was a real big
the
drop
Dow
here.
fell 400 points yesterday, kind of out of the blue. We've been in this narrow trading range for about 2 months, and suddenly yesterday we had a 400-point drop. So we'll be curious on Monday as to whether that continues. That's an interest rate concern. If interest rates are going up, if the Fed raises interest rates, that can make the market a little volatile.
Okay. There's so much more to talk about and so little time. How do folks find you beyond this morning?
I'm at UBS Financial Services up in Hunt Valley. But whether it's me or UBS or whatever, find an advisor. It really helps to use a financial advisor.
All right, thanks for all those
Thanks
helpful
for having
tips
me.
this morning.
Yeah,
Thanks,
Jonathan
Tracy.
Murray. Pleasure to meet you. Pleasure to see you. Thank you so much.
Pleasure was mine.
All right, and we'll be right back.